only 13% of voters are confident that Prime Minister Anthony Albanese is doing enough to address Australia's cost of living pressures, according to some new survey results. Mr Albanese's performance has declined steeply, according to nearly 3,000 voters surveyed by the Liberal-aligned CT Group. The Prime Minister's net approval rating fell 9 points to 6%. 58% of respondents say they are not satisfied the federal government is working to fix the housing shortage. More than half of voters say they're having difficulty amid Australia's cost of living pressures, up from 39% of respondents the month previous. 61% believe the government is heading in the wrong direction, a rise of 10% from April to June. The polling was commissioned by British American Tobacco, who are campaigning against the government's vaping crackdown. Acting PM Richard Marles is defending Labor's performance.
The only thing we can do, both for my own mental health and in terms of being a good government, is to focus on doing that, being a good government. And we are very focused on the issues of cost of living and have been since the day that we were elected.
AMP's Chief Economist Shane Oliver joins us live now with some tips on how to help manage your finances in difficult times. Shane, good to see you as always. Thank you. Just firstly, though, how would you actually describe consumer sentiment at the moment? Just how tight are our purse strings actually getting?
Look, I think it's a very difficult environment many people find themselves in. It was evident in the survey you just referred to then. It was evident in the Westpac Melbourne Institute's Consumer Confidence Survey today, which showed a slight improvement on where it was a month ago, but historically is still down around levels associated with recession. And within that, of course, people are very worried about their household finances, and cost of living pressures and high interest rates are big factors behind all of that. So it's become a very difficult environment for many. Obviously, there's a lot of people out there who are not feeling a problem and might be celebrating higher interest rates, but many with a mortgage in particular are finding it increasingly difficult. And even surveys that AMP Bank have done, an organisation that I'm associated with, has shown something like 70% of homeowners with a mortgage worry about servicing their loans. And if there's any more interest rate hikes, then 30% are already very, very worried with interest rates right where they are now.
Okay, right. So that sounds like a pretty bleak outlook in terms of where mortgage holders are at the moment. And that can obviously be really stressful when the outlook is bleak. So as someone like you who's been through the economic ups and downs, you've seen the swings and roundabouts over the decades, what advice would you have to those people who are really feeling the pinch?
Well, I think there's a couple of things. Like, obviously, I put a list out today of sort of tips. 15 of them, and of course some of them relate to longer term financial issues and investing. But I think in terms of mortgages and cost of living pressures, particularly those with the mortgage, if you are struggling with that mortgage, if you are starting to feel uneasy about being able to keep up the payments, the best thing to do right now is to contact the bank. You can always try and shop around and get a lower rate. But if that doesn't work, and one of the best things to do is stick with your existing bank and tell them your situation. And it's quite possible that they will be able to help you, either temporarily lowering the interest rates. I mean, many Australians have phoned up their banks and asked for a lower rate, and they've got that because it's a highly competitive housing market at present. There's also options like switching for a period to an interest-only loan. Now, obviously, of course, that takes it longer to pay off the loan, but by the same token, it can get you through this difficult period. There's also help that banks can offer in terms of financial well-being. So I think that is a key thing to do in this environment, to reach out to your bank. Don't leave it to the last minute before you end up having to sell the house, because that's a worst case option.
Well, yeah, I think that's a really good point. I mean, being assertive sounds like it can really go a long way in some of those situations that you just referred to. I saw in that tips list that you sent out today that you're also reminding people at the end there that there's no such thing as a free lunch. Do you worry that a lot of people have become too complacent after riding through the pretty good times that we all experienced in recent years?
Yeah, there is an element of that. And of course, a few years ago when I put this list out, one of the key factors there was to allow that interest rates do go up as well as down. And we had almost a decade-long period of falling interest rates, and many people got relaxed in that environment, thinking, well, rates won't go up much. And of course they have. And history tells us that we have these cycles. So I think it's always very important to bear in mind there is a cycle there. Things go up and things go down. Right now, of course, we've seen a lot of interest rate hikes, so we're getting close to the top, and the next big move might be down. But I think the broader point you raised there is no free lunch here. Money does not grow on trees, and you have to allow for that. When people come offering you investment returns that are too good to be true, or financial services that don't make any sense, or you don't understand something, someone wants you to pile into Bitcoin when it's up there at 68,000 at the high point a couple of years ago, just be skeptical of that. And just bear in mind that history is replete with these sorts of things where people think there's going to be a free lunch, greater than normal returns or fantastic conditions, low interest rates forever, only to be disappointed. So it's always worth allowing for that, allowing for rainy days. Make sure you don't take on too much debt. If the bank offers you lots more money than you really want, don't take it. Always make sure you've got a bit of a buffer in there as well for when things do go bad, whether that could be job loss or higher interest rates.